All right, so we have the substantive procedure, first of all, the topic which we are going to revise, and very, very important for the exam, substantive procedures. Now, first of all, let's clear the understanding regarding this topic. What exactly is the substantive procedure? So remember, there are two types of audit procedures. So we have the audit procedure to test the system and the audit procedure to test the financial statement. So audit procedure to test the system, and then we have the audit procedure to test the financial statements. So audit procedure to test the system is known as the test of controls. And the audit procedure to test the financial statements is known as the test of details, or we call it as substantive procedures. So that means whenever this topic is coming up in the exam, the audit procedures, the substantive procedures, so your objective should be the financial statements. Any procedure that does not give meaning in relation to the financial statements, any procedure that is not relevant to the testing of the financial statement will be irrelevant. And in that case, you will not be able to earn any marks for it. So substantive procedure are the procedures to test the financial statements. Now, when we say the financial statements mean the statement of the profit and loss, the statement of financial position, notes of the financial statement. That means we are talking about to test the assertions related to the financial statements. Now, assertion means the claims made by the management regarding the financial statements. For example, when they have the statement of the profit and loss, they have the revenue figure. Regarding the revenue figure, they're claiming that the sales figure, the sales revenue figure that they have recorded over there is the actual sales, what they have earned, the sales which have already been occurred, and these sales belong to this year. And similarly, they have the expenses. When they record the expenses, they claim that, okay, these expenses belongs to the current year. That means the cutoff period. And these expenses are relevant to the company. That means the expenses belongs to the company. And the expenses have actually been occurred. And similarly, when you talk about the statement of financial position, they have the assertions over there. For example, assets. The assets they are claiming belongs to them. The assets are in their ownership. Similarly, when they're talking about the assets, they talk about their existence, that all those assets actually exist. Similarly, when you talk about the financial statements, they claim that, okay, adequate disclosures have been provided. That means the completeness. So when we are applying the substantive procedures, okay, when the auditor is testing the financial statement, those procedures are known as the substantive procedures. And those procedures are basically to test the assertions, to confirm the assertions. So basically, when you are physically inspecting the property, plant, equipment, what you're doing, you're confirming actually the assertion of what? Existence. Similarly, when you are looking at an asset which is present on the site, and then you look for them into the asset register, you're checking the completeness, that all those assets which are physically available have been recorded within the financial statement as well. You're looking for the completeness. When you're looking at the title deeds of those assets, the ownership, whether the company has transferred the payments in relation to these assets, and the same amount is in the bank statement. So you are testing the ownership as well as the valuation. So whenever the auditor performs any activity known as the audit procedure, that is to test a particular assertion. Now that assertion can be related to the statement of the profit and loss, such as the cutoff. such as the occurrence, such as the completeness. And it can be any assertion related to the statement of financial position, such as uh, we have the presentations, we have the ownership and obligations. So remember this thing, that substantive procedure are the procedures relevant to the financial statements. And when the auditor is applying those procedures, auditor is testing those assertions. So that means if your procedure does not give any meaning that which assertion is actually being tested, then you won't earn any marks for it. Now, if this is coming into your mind that, okay, do we have to write that, okay, physically inspect the asset to confirm the valuation? Do we supposed to write the particular term of valuation? Or for example, when you are checking the non-current asset register, so do we supposed to write the term completeness? When we are looking at the GDNs, goods dispatch notes, or the delivery notes, do we need to write occurrence? So remember, if the examiner is not asking for those particular terms, then you are not supposed to write these terms, as long as your procedure is giving the correct meaning without that. For example, when I'm talking physically inspect the property, plant, and equipment to confirm whether they're available in the working condition. Now, examiner knows that this assertion is about the existence. But even if you have not written the term existence over there, so there's no need to write the particular assertion if the examiner has not asked for, as long as your procedure is giving the full meaning. But for example, if you only write physically inspect the asset and you don't go further, so your procedure is not giving any meaning, you won't earn any marks for it. Similarly, when you are writing, okay, so obtain the loan agreement, and that's it. So what you have to do with the loan agreement, what you are actually checking in that loan agreement, so you are not going to get any marks for it. Similarly, if you're writing review the independent values report, for what purpose you're reviewing the independence value report. So if your procedure is not giving the complete meaning, you won't be getting any marks for it. So that is something very, very important to understand. So yes, this is a question from your Kaplan Git, question number 221. Hyacinth is the name of the question, and we have different paragraphs in it. First of all, inventory valuation. Okay, so the next one is the research and development. Now we know that inventory is IAS2. You don't need to remember the standard, by the way, just telling you, because you need to bring the accounting treatment in your mind when you are making the substantive procedure. So IS2 is about the inventory. Now inventory we know should be recorded at lower of the cost, and the NRV cost is the cost of purchase plus any direct cost. And then we have the net realizable value, which is the estimated selling price less estimated cost of completion, less estimated cost necessary to make sales. So whatever is lower, basically record the inventory on that particular figure. And inventory includes the raw material, inventory includes the work in progress, inventory include the finished goods. All these three are recorded as inventory. So we do count the raw material, we do count the things which are in progress, and then we have the finished goods. All of these constitutes the inventory figure within the financial statements, the closing inventory in the statement of financial position. And also this figure is deducted from the cost of sales in the statement of the profit or loss. So IS2 is about the lower of the cost and NRV. So whenever you're reading the question, make sure you have this thing in your mind before you start reading the substantive procedure, because without accounting, you cannot make the procedures. Now, why is that? Because being an auditor, you are checking the financial statements. So you need to know how those things are recorded within the financial statement before you actually see the financial statement. So if being the auditor, you are unaware of the accounting treatment, then you cannot check the correct accounting treatment within the financial statement. So make sure you understand this point, that without knowing the accounting of those transactions, you cannot successfully audit the financial statement. So you need to know the accounting treatment before you pick up the set of the financial statements in your hands. Okay, so then we have the research and development. Now we know that this research and development is IAS 38. And we know the treatment of the research cost should be expensed out, whatever, however it is. It should always be expensed out. And then we have the development. Development is the next stage of the research when we have the successful research being conducted. The next stage is actually the development stage. Now, the development cost should be capitalized if the criteria is met. The criteria, the mnemonic is PIRATE. So probable economic benefits, intention to use or sell, resources are available, technical feasibility, and expected what expense can be measured reliably. Yes, E was the expense can be measured reliably. So this is the criteria. And when the development is completed and is available for production user sale, then you need to amortize that thing as well. Then we have the sales tax liability. So when the entity is doing the sales and they're collecting the sales tax on it, which is known as the value added tax, it's a liability of the entity. So basically it's the output VAT the entity is collecting. We know that the double entry would be, for example, debit receivable, and we are not supposed to write the double entry in the exam, just telling you because you need to make the audit procedures. So debit receivable and the credit sales, and then credit we have the VAT account, the sales tax. So sales tax is basically the current liability. So when you record this transaction in the sales tax control account, this is the figure that is first of all being net off with the input VAT, and then if the output VAT is more than the input VAT, then this is the liability that should be recorded within the financial statements. So okay, this is the scenario. Now let's read the requirements. So we have 3 requirements. Describe the substantive procedures. Now again, it is specifically written substantive procedures, so that means procedures relevant to the financial statements. The auditor should perform to obtain sufficient and appropriate audit evidence. Now these are the characteristics of the evidence. That evidence should be sufficient. When we say sufficient, that means in terms of the quantity. And when we say appropriate means, so this is the sufficiency in terms of quantity, and then we have the relevance and the reliability, that is appropriateness. So the quality of the audit evidence should be sufficient and appropriate. That means in terms of the quantity, it should be sufficient, and in terms of the relevance and in terms of the reliability, it should be appropriate. So describe the substantive procedure the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the valuation of the Hyacinth company's inventory. Now the inventory is IS2 as we have discussed. So 6 marks means you need to write 6 procedures. Again, then we have describe substantive procedure the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the Hyacinth company research and development expenditure. 4 marks means 4 procedures. And then we have described substantive procedure the auditor should perform in relation to the Hyacinth company's year-end sales tax liability. 4 marks means again the 4 procedures. So these are the things that is being given to you in the exam and in relation to the substantive procedure. So let's start with the research and development first. And we know the research cost should be expensed out and the development cost should be capitalized. So make sure you understand this treatment before you write the procedures. Hyacinth company includes expenditure incurred in developing new products within the intangible asset once the recognition criteria of IAS 38 have been met. Okay, fine. Intangible assets are amortized on a straight line basis over the 4 years. Okay, so we know that the intangible assets having the definite life should be amortized. And obviously, the amortization is just like the depreciation. It's an accounting estimate. And whenever it comes to an accounting estimate, that accounting estimate should be reasonable. Now, because it's an accounting estimate, the entity usually makes a judgment to reach those figures. So it's actually the entity deciding that okay, the depreciation amortization should be charged in 4 years. So they should have some logic behind it, and that logic should be that rationale and the basis should be asked from the finance director. Because this is an accounting estimate, it should be reasonable, and then we need to confirm the reasonableness of the accounting estimate. So right now I'm just discussing the accounting of it. And when you know the accounting, the next step is to write the procedure. The amortization policy is based on the past experience of the likely useful lives of the products. So we know it's an accounting estimate, and basically, when you're making an accounting estimate, it does involve uh, the past figures that okay, how much these assets were actually uh, observed within those past years. So the amortization is according to that. The opening balance of the intangible asset is 1.9 million, which is the opening balance you can confirm from their financial statements as well as their uh, other records. In the current year, Hyacinth company spent 0.8 million developing three new products, which are all at different stages of the development. So 0.8 million are at different stages of the development. Now that means this 0.8 million cannot be capitalized unless it meets the criteria, because maybe there are uh, some products which cannot reach the development, which cannot reach the complete development state. Maybe they are not uh, viable. The probable economic benefits is not the case over there. In that case, it should be expensed out, or currently the criteria is not met. So yes. Now let's start writing the procedure. Okay, before that, we know some techniques. We know A, that means analytical procedure. That means comparison of this year amortization with the previous year and investigate any differences. We know E, which means inquire and discuss from the relevant personnel, in our case, the finance director or the finance manager, because here they have written, there's no personnel over there. So you can write finance manager or finance director, whatever, financial controller even. And then we have the I, which means the inspection. Now, inspection means the inspection of the documents, such as in this case, they have 0.8 million being spent. So they have the certain documents uh, in relation to 0.8 million. For example, they have those invoices, supporting documentation. You can inspect those. And then we have the observation. Now, what you can observe is they're saying that okay, all those three products are at different stage of the completion. So you can observe the actual process being going over there to understand the completion of those projects. And then we have the AEIOU. That means U means the recalculation. In this case, we have, for example, the amortization of the development expenditure. Now, obviously, they will not amortize this 0.8 million because they are currently at the different stage of the development. Amortization is charged on these opening balances, which are existing capitalized intangible assets. Okay, now we need to write the procedures, how we can write it. So yes, first procedure. Discuss with the relevant personnel of the management, or discuss with the relevant personnel. You can just write it, or you just can write just discuss with the management the progress of each of the project currently in development. So discuss with the relevant personnel of the management the progress of each of the project currently in development and confirm whether they are able to reach the completion stage. Now, this thing can come to your mind, okay, because they are the management. Obviously, they're going to say yes. Obviously, why not? We are developing something. It will be definitely completed. But yes, this is a process. This is part of the testing. You discuss with the relevant person of the management, and you ask them, okay, uh, discuss each the stage of the stage of the development of each project, and confirm whether they are able to reach the completion stage. Then only projects that meets criteria should be capitalized. So there's no need to write this line, by the way. But if you have written this thing, then it gives the complete meaning that because why you are asking, because you need to know the development stage, because if they cannot be completed, the project is not viable, then they cannot capitalize it. So the last line are optional. But if you write till here, then it's fine. Okay. The next procedure. Obtain and review the breakdown of this thing. Spending of 0.8 million. Obtain and review the breakdown of spending on the development expenditure. Obtain and review the breakdown of spending on the development expenditure. Cost the research elements and agree it to the statement of the profit or loss. Also cost the development expenditure and confirm whether the same amount is being capitalized. So your procedure should give the complete meaning. If you're writing obtain and review the breakdown of spending on development expenditure and you're not going further. Now this procedure can be written in different ways. For example, obtain and review the breakdown of the spending on the development expenditure and agree the figure with the relevant and supporting documentation. This would be fine as well. Obtain and review the breakdown of the spending on development expenditure and cast the research element and agree to the statement of profit or loss, or you can write cast the research element and agree the same figure is being expensed out. Also cast the developer expenditure and agree that the same figure is being capitalized. So you can write the same procedure in different words. For amortization, discuss with the finance director the rationale or the basis of amortizing on 4-year useful life. Because this is based on their past estimate. Ask them, okay, what are their bases and the rationale for amortization? Discuss with the finance director the rationale of amortizing on 4-year useful life and confirm the reasonableness. Reasonableness of what? Reasonableness of the accounting estimate. And similarly, we do have the recalculation. So you can write recalculate the amortization charge on already completed development expenditure or on other intangible assets, but there is no need to write or other any intangible asset because in this question we do not have that. So recalculate the amortization charge on already completed development expenditure and agree the figure with that of financial statement. That means the figure which they have recorded within their financial statement. You can also write recalculate the amortization charge on already completed development expenditure and confirm that only this year amortization has been charged within the statement of the profit and loss. You can write this thing, this procedure in many, many ways. Now, there is another way to write these procedures, which is through this mnemonic. Discuss with the finance director whether it is probable that economic benefits will flow to the entity because only then the development expenditure can be capitalized. Discuss with the relevant personnel whether it is technically feasible that the project will be completed because it is only then it should be capitalized. And then one of the most easiest procedure that is relevant almost everywhere and that can give you free marks, that is review the disclosures in the notes to the financial statements to confirm they are provided in accordance with IAS 38 or in accordance with the relevant standard if you don't remember the number. So this one is the free one. You can write it almost everywhere. Even in the case of the revaluation, even in the case of the impairment. So you can write this procedure, even in the case of provisions, you can write it anywhere. So yes, so these are the free marks. All you need to do is to just understand the accounting that, okay, research should be expensed out, development should be capitalized only if the criteria is met. And then we have this A, E, I, O. You can also write it, for example, because they already have the opening balance from the previous year. Compare this year amortization charge with previous year and investigate the differences. Now, how you can further relate it, further relate the case study. For example, discuss with the relevant personnel of the Hyacinth management. Write the name of the company. Write the name of the company. Obtain and review the breakdown of the spending of development expenditure of 0.8 million. Just try to relate it with the case study. And this is as simple as I'm saying. Discuss with the relevant, discuss with the management of Hyacinth. This, the name of the company. Review and obtain and review the breakdown of the spending on development expenditure of 0.8 million. So just try to relate it with the case study. For amortization, discuss with the finance director of Hyacinth. Write the name of the company. This is how the examiner may know that, okay, you have not crammed the procedures already and you know how to relate it with the case study. So these are very easy techniques to get a good impression in front of the examiner. And this is how you can obtain full marks in this easy but technical area of the exam.